Hello and welcome back to Module 5 of the Technical Analysis Masterclass, the Pressing Points-Based Trading System. It makes sense that choosing to trade only quality opportunities is going to increase your success rate, but differentiating quality opportunities from standard trades can be a subjective process for most traders, and streamlining the consistency can be even more difficult. In this lesson, you'll learn the components required to build a Pressing Points-Based Trading System. You'll learn how to rate each score of the Pressing Trading System. You'll learn how the elements of the Pressing Trading System work together, and you'll learn how to identify the elements of the Pressing Trading System. This lesson will focus on the Pressing Points-Based Trading System, a proprietary system we designed to help quantify the quality of trades to ensure that a layer of consistency is applied to our analysis techniques. It is well documented within the industry that the most successful traders never trade without a trade plan in place, but amazingly, the majority of traders fail to implement this most important process. The Pressing system acts as a trade planning blueprint to help traders identify quality trading opportunities and adds a level of consistency to the analysis process for each and every trade. The term Pressing is an acronym for all of the components we use to assess the quality of the trades that we consider when carrying out our analysis. The points-based system is built on 6 components, with each representing the important elements of the Technical Analysis Masterclass and the ELD 363 multi-time frame system. The letter P represents price action and includes price trends, candlestick, and bar patterns found on trading charts. The letter R represents risk management and includes stop loss and profit level information, as well as risk to reward ratios. The letter E represents the ELD 363 multi-time frame system that was explained in the previous section. The letter C represents chart patterns and refers to the chart patterns learned earlier in the sections of this course. The letter I represents indicators and refers to the indicator techniques learned in the earlier sections of Module 4. And the second C represents charting techniques and includes support and resistance, trend lines, Fibonacci retracements, and channels. When you create a trade plan, you're essentially building a for and against case to assess the viability of a trade. Similar to how a prosecutor builds a criminal case based on available evidence, the more evidence that can be presented, the stronger the case will be. Each of these 6 components represents an important part of the trade planning process and could play a part in determining the ultimate success or failure of every trade that you enter. Following the Pressing system ensures that you consider each of these important elements prior to placing the trade, effectively building a case to place a trade based on the available evidence on the charts. To again borrow from the criminal prosecutor example, the stronger your case is to place a trade in a particular direction, the better the chance that that trade will move in that direction. The Pressing system uses points which are assigned to each of the components that must equal a total of 75 or higher for a trade to be a valid Pressing trading opportunity. The Pressing system is broken down into a star rating, where 1 star is awarded to a score between 75 and 124. 2 stars are awarded to scores that fall between 125 and 174. 3 stars are awarded to scores that fall between 175 and 199. 4 stars are awarded to scores that fall between 200 and 249. And 5 stars, the highest rating, are awarded to scores which total 250 or above. Now, although it is not a requirement to have points assigned to each of the 6 components to generate a Pressing score, having the scores evenly spread across the components gives you a weight balance that factors in many elements. If the score is too lopsided in only a couple of components, there is a chance that some important information regarding chart activity may have been overlooked, putting a potential trading opportunity at a disadvantage. Sourcing information from all of the different components gives you a broader view of what the market is trying to tell you. Having as much information as possible at your disposal when placing a trade ensures that you have considered many possibilities and can make a difference to your ability to locate and trade only quality opportunities. Let's now work through each of the Pressing components to explain how to identify each of the elements that they are made up of. Price action is one of the most important components of any trade plan, as it is the most reliable leading indicator available to traders. This component focuses on price trends, candlestick patterns, and bar patterns, and how they fit in the overall assessment of a trading opportunity. Firstly, you need to identify if you have the current price trend moving in the direction you intend to trade. If the answer is yes, you'll have points added to the Pressing balance. When trading on candle charts, you will need to be on the lookout for candlestick patterns that align with the direction of your trading opportunity. If your trading opportunity requires you to place an entry long and you see any of the candles that we can see on the screen, you'll have points added to the Pressing balance. If your trading opportunity requires you to place an entry short and you see any of the candles that you can now see on the screen, you'll have points added to your Pressing balance. If your trading opportunity requires you to place an entry long and you see any of the candlesticks on the screen form, you'll have points added to your Pressing balance. And if your trading opportunity requires you to place an entry short and you see any of the candlesticks on the screen form, you'll have points added to your Pressing balance. Now let's look at risk management. The Pressing points-based system uses 2 forms of risk management assessment in terms of adding to a score of a trade: the risk to reward ratios and the placement of stop loss and take profit levels. In many ways, correct take profit and stop loss levels define how successful a trade can be, and if used incorrectly, a potential good trading opportunity could be brought undone due to poor execution. Likewise, good risk to reward ratios could greatly enhance the viability of a trading opportunity, and although these 2 elements tend to go hand in hand, they can accumulate points for the Pressing system differently. The first point scoring assessment for the risk management component is carried out on the risk to reward ratio for the trading opportunity. Depending on the risk versus reward that you have on your trade, you will receive a certain amount of points for each level. It is important to remember that the risk to reward ratios aren't just numbers you pull from the sky, but the correct take profit and stop loss levels for a trading opportunity that you have identified. The second point scoring assessment is carried out on the stop loss and take profit levels themselves. This score is not applied to the size of the stop loss or the take profit levels, as this has no bearing on the quality of the trading opportunity. The stop loss and take profit levels are scored by the amount of obstacles that stand between the entry point of the trade and the respective level. We can see in the example on the screen 4 potential obstacles that need to be considered to apply the score correctly for a take profit level. Because we ideally want no obstacles between the entry point and the take profit target, if none of the listed obstacles stand in the way, you will receive the maximum amount of points for the Pressing balance. If one of the obstacles is present, the score applied reduces, and if 2 or more of the obstacles are present, no score will be applied to the balance. In terms of the stop loss level, obstacles are your friend. Ideally, the more obstacles you have between your entry point and the stop loss level, the more protected the stop loss will be, so the score increases as the obstacles do. You will receive points for every obstacle that falls between your entry point and your stop loss level. The amount of total points available for this component highlights how important risk management is, and why it is a non-negotiable element of any successful trade plan. Now let's look at the E. It should be fairly obvious to you now that trading in the direction of the prevailing trend is generally going to give you a better chance of success than attempting to place a counter-trend position. As I explained earlier in the previous section, identifying the correct time frame to assess the prevailing trend's direction in relation to the trading opportunity that you have identified can play a major role in the success or failure of that trade. For this reason, if your trading opportunity has an ELD 363 confirmation, you will receive the maximum amount of points to your Pressing balance for this component. Now we have the first C, chart patterns. There are a couple of important reasons why identifying potential chart patterns is a great way for traders to enter positions. Firstly, stop loss and take profit levels are generally predetermined, which removes any ambiguity. And secondly, you have the added benefit of potentially thousands of traders identifying the same pattern and trading in the same direction. If the trading opportunity is based on any of the chart patterns that we can see on the screen with the prevailing uptrend in your favor, you'll have points added to the Pressing balance. If the trading opportunity is based on any of the chart patterns that we can now see on the screen with a prevailing downtrend in your favor, you'll have points added to your Pressing balance. Now we move on to I for indicators. Although there are hundreds of different indicators available, it's important to only use indicators that offer relevant information to the trading opportunity that you have identified. There are two forms of point accumulation in the indicators component: indicator signals and indicator and price divergence. Let's first look at indicator signals. If the trading opportunity identified requires you to take a long position, and any of the indicators that we can see on the screen are displaying a long signal, you will receive points for each of the indicators to the Presic balance. If the trading opportunity identified requires you to take a short position, and any of the indicators that we can see on the screen are displaying a short signal, you will receive points for each of the indicators to the Presic balance. To ensure that the Presic balance isn't overinflated with indicator points, the amount of indicators you can use to help validate a trade is limited to a maximum of 3. The power of indicator and price divergence warrants a higher point value, and when bullish divergence is located around the potential trading opportunity which requires you to take a long position, you will receive points for Class A and Class B bullish divergence on the indicators that we can see on the screen, but there will be no points added for Class C bullish divergence. When bearish divergence is located around a potential trading opportunity which requires you to take a short position, you will receive points for Class A and Class B bearish divergence, and no points for Class C bearish divergence for the indicators that we can now see on the screen. It is okay to use multiple divergence signals to add to your Presic balance, but to ensure you don't overinflate the balance with just one component, you must not add more than 2 divergence indicators to the total Presic balance. Let's now look at the last C, charting techniques. The charting techniques component incorporates some of the elements covered back in Module 2. If the trading opportunity requires you to take a long position, and any of the charting techniques that we can see on the screen are present, you'll have points added to the Presic balance. If the trading opportunity requires you to take a short position, and any of the charting techniques that we can see on the screen are present, you'll have points added to the Presic balance. Once again, it is okay to use multiple charting techniques to add to your Presic balance, but to ensure you don't overinflate the balance with just one component, you must not add more than 3 charting techniques to the total Presic balance. It is important to note that this particular Presic scoring system has been specifically designed for trending markets. If you choose to apply this system to directionless markets, some of the elements inside each of the components will score differently and adjust to the directionless market dynamics. In this lesson, we have learned the components required to build a Presic points-based trading system. We have learned how to rate each score of the Presic trading system. We learned how the elements of the Presic trading system work together. And finally, we learned how to identify the elements of the Presic trading system. This concludes section 4 of the Advanced Techniques module. In the next section, we focus on identifying quality range-bound markets and adapting the best chart patterns that work consistently well in this market environment.